Cliff, thank you for being here today.
Thanks, Jeff. Happy to be on.
Excellent. So could you tell us first about yourself and tell us a little bit about your career and how you came to join Cerrado?
Sure. My name is Cliff Hale-Sanders. I'm the president of Cerrado Gold. I've been in this role for about coming up on 10 years now through different vehicles that we created as a team. Prior to that, I spent about 22 years as a sell-side analyst at all the various brokerage houses here in Canada, focusing primarily on base metals and gold companies as a way to evaluate their investment merits and the strength of their assets going forward. During that time, I met the team that is now at Cerrado Gold. They have previously developed names like Desert Sun, Largo Resources, Sierra Metals throughout the years with a great operating and development team. So we're now positioned to grow the next vehicle.
Before we actually speak about the individual assets, I would like just to if you could tell us a little bit about your team, and especially you have two development assets, one VMS deposit in Portugal and one larger iron ore project, open pit. Do you say that is it within your team's wheelhouse to build these mines actually and also operate them if you would do so in the future?
When you look at the team in terms of the management team and the board of directors, they've had significant experience developing assets from very early stage exploration all the way through development, financing, and then construction and then operation. So the team on and off over the years has been together probably in excess of 20 years. People come and go, obviously, but the team itself is very, very strong in all areas of the development cycle. Currently, we have three assets, as you indicated. One's an operating gold mine in Argentina, produces around 50 to 60,000 ounces of gold. We're also developing a VMS project in Portugal, which has copper, zinc, lead, silver, and gold in its mix. And longer term, we're developing the large-scale iron ore project, Mont Sorcier in northern Quebec, just outside of the town of Chibougamau, which has all the hallmarks of being the next iron ore asset in Canada.
Could you summarize last year for Cerrado and give us the key takeaways?
Well, last year for Cerrado was really a ramp up in production at our Minera Don Nicolas mine in Argentina. We saw annual production for the year of a little over 50,000 ounces. Q4 was a little over just under 14,000 ounces. And really, Q4 could have been a stronger quarter. From a mining perspective, we significantly improved the amount of material crushed and moved to the leach pad. At the same time, we started our initial underground operations, which provided additional high-grade ore feed to the CIL plant. So we had two types of production capacity there. And why I say it could have been better, Q4 was unseasonably dry, limiting the amount of water we had available to put on the leach pads, reducing the amount of material that we could leach at full capacity. So if we'd had normal water, I would expect quarter to have been a fair bit stronger. We're obviously looking at developing additional sources of water to mitigate this issue, but it was unseasonably dry on that front. But going forward into 2026, I would expect that mine to continue to operate at a very steady state now with all the various infrastructure investments that we put in over the last couple of years now fully in place in terms of crushing, trucks, fleet, and things of that nature. On the other assets at Lagoa Salgada, we continue to progress an optimized feasibility study and environmental impact assessment during the course of the year. That continues to progress at this point in time. Subsequent to year end, we did have some issues with the Portuguese Environmental Authority in terms of getting our project permitted. We are currently in discussions to address certain issues that were brought forward. We think those can be resolved. Don't really have a time frame for that at this particular juncture, and we can go into more detail of that in the future on the conversation. But all in all, the progress of the asset itself was quite strong. In Quebec, we're still targeting a feasibility study to be released in Q2 of this year. That progressed quite smoothly throughout 2025 with infill drilling, various engineering disciplines, various environmental work going on behind the scenes to submit the environmental impact assessment around the end of 2026. So that's progressing well to really daylight a very robust iron ore project. During the year, we did change the development parameters somewhat to what was originally a 5 million ton per year proposal in the original PEA to one that is now starting at 4 million tons. And then somewhere in year 3 to 5, we'll work on the best economics. We're going to double that to 8 million tons per year. So it's looking like a very robust project to deliver DR grade pellet feed to the iron ore market, which is the premium grade 67% plus iron ore, which gets a significant premium in the market and really is what is driving the green steel transition around the world to improve the emissions quality from various steel production.
So how much did you produce at Minera Don Nicolas last year? And also, could you give some insights to the cost, although Q4 isn't out yet? But
for the year, we produced just over 50,000 ounces. Sales will be right around that, give or take from a timing perspective, but we produced 50,238 gold equivalent ounces. And the cost structure will be somewhere in that 1,800 all-in sustaining cost sort of number that we were guiding to, give or take a little bit. Obviously, with the lack of water, we've had to buy water, which is obviously very expensive. That is continuing to be I would say, the only outlier in terms of cost. Everything else, as I said, is actually progressing quite well from an operating standpoint in terms of tons moved, grade of material, and waste moved as well.
By the way, how much of production from Minera Don Nicolas is gold and how much is silver, roughly?
I would say 95% gold.
What's the current financial position, with regards to cash, working capital, debt?
Cash we expect to exit the year around 20 million of cash. Working capital position pretty much unchanged from where it was before. Obviously improved from the stronger cash position. But when you look at Q3, the working capital position gets a little bit crowded out because of the way we have to record the streaming arrangements, both at Minera Don Nicolas and Lagoa Salgada. They are termed as current, even though they're not really current in that term. They're termed out over the life of the operation, but they do crowd out the dynamics. Our operations in Argentina, we expect that working capital position to remain roughly where it is, somewhere in that 12 to 15 million receivable sort of number. That's going to be the sort of the going rate going forward as a standard operating environment.
You have a number of short-term local loans around the 13 million. Will you just repay them or will you roll them, or what's the plan there?
It all depends on what's the best use of our investment opportunities. Right now, getting short-term loans in Argentina is quite attractive and quite manageable. They're readily available in the market. So again, that's a function of best use of our cash in terms of growth opportunities, or paying down debt, or what makes the most sense at that particular time.
You also have some promissory notes, or 1.5 million promissory notes, 2.8 in debentures. They're soon maturing in a few months, I think. Will you just repay them?
Yeah, the debentures will be repaid over the course of the year. The timing of that is it's a little fluid. The other notes will probably get repaid as well. There's no strict timing on that. It's, as I said, some of them can be easily refinanced and termed out. So it's, again, the best use of opportunity.
And obviously, you still reached guidance, but it was right at the lower end, and also revised guidance. Was the water the only primary reason for Q4 being a little bit weaker, or
when you look
reasons?
At Q4 and look at sorry to interrupt, but if you look at Q4 versus Q3 in terms of ore mined and ore placed on the pad, we were significantly higher versus Q3. So our production rate, if we had full access to water, improved our recovery rates of the gold versus where we were, because recovery, because of the lack of water, dropped a little over 30% versus 47% in Q3. I think our production from the pad would have been significantly higher. In Q3, we produced almost 10,500 ounces or GEO ounces. In Q4, we were slightly under 8,000 ounces. So that delta of roughly 2,500 ounces is what was essentially missing in Q4. Now, that gold is not lost. We will, as water becomes more available, continue to irrigate the pad on a more aggressive basis and leach some of the residual gold that is there in other areas of the pad that we were not able to leach. So that gold will slowly come out over the course of 2026.
The water issue, has that been, how are you addressing that, and has that been resolved, or is it, a constant thing that, when it gets dry again in Argentina, that could...
We're currently drilling some additional boreholes. Our prior boreholes they're not, the diameter of them was not quite large enough to allow us to pump up more water. We have the water, it just we weren't able to pump it up the boreholes we had, because we've never had this issue where it's been quite as dry as it has been, and that's even before our ownership. So we're currently drilling one or two new boreholes to alleviate that. There'll be much wider diameters. We can put bigger pumps and obviously extract higher amounts of water. So I think it's a question of timing somewhere in Q1. Hopefully we will address that, and it won't be a reoccurring issue going forward. As we go into the winter periods in Argentina, remembering they're offset to North America, we will get significantly more water anyway.
So you're guiding 50 to 6,000 ounces gold equivalent ounces this year from MDN. How will the production vary over the year, roughly?
I think, as usual, it's going to be kind of back end loaded. And one of the reasons for that is, one, in the early part of the year, we have the water issue to attend with, but also the timing of development and production cycles from the underground. Obviously, in Q4, we had a significant contribution from the underground. Q1, that's going to be relatively modest because it'll be more a development cycle for that quarter, just on the way that, we've only just started going underground. So our number of working faces is restricted at this point in time. So as we continue to open it up, it'll get a bit more even keel. But I think the second half of the year will be much stronger than the first half. Well, call it 60-40.
And what do you expect the all-in sustaining cost to be, roughly?
I would think, depending on the water issue, how much we have to buy, somewhere in that 1,800 all-in sustaining cost would be our target at this point.
How will the split be in terms of production from the open pit and underground?
So the bulk of production still comes from the heap leach open pit versus underground at this point. I would say probably 40,000 ounces from the pit versus 10 to 15,000 ounces from underground.
So then, in terms of the open pit, what's the throughput run rate, and will it vary a lot over the year, or?
No, the heap leach is very consistent now that we've upgraded the crushing capacity, invested in some additional trucks. So we typically are looking to put 10,000 tons of material on the heap leach pad on a daily basis. So it's a significant amount of movement of material. And as you saw in Q4, we're pretty much we're hitting our stride there. In Q4, we moved to the pad just under 10,000 tons per day. So pretty much on target. And that's really where we want to be. That's the run rate we want to be at to meet our production targets.
What recoveries do you expect both for the leach pad and for the CIL?
Well, the CIL gets in excess of 90%. That's how it's been. So the more high-grade material we can pump through the CIL plant, because we are still blending the high-grade underground with the low-grade stockpiles just to fill the mill. Otherwise, the economics wouldn't be there. That's very robust. The recovery in the leach pad is very dependent on the ore source that we have in terms of, is it oxide transition or primary? The oxide material, we get a much higher recovery, call it 55 to 60%, versus the primary, which could be 35 to 40%. So it depends on the mix. On average, let's call it 45%.
As you get deeper into the pit and mine more primary or fresh rock, will that become quite palpable in the second half of the year and going forward after that? That recoveries, drop?
There's two things that happen there. Obviously, we get better recoveries in the oxides, but it's also significantly lower grade. When we get to the primary ore, instead of being 0.8 grams per ton, it's more like 1.7 grams per ton. So whilst we see an offset in recoveries, the actual gold production is consistent because the grade is improved.
So how much, if you talk about the underground operation, how much of the 10,000 ton per day mill feed should come from higher grade underground material this year, and how much from the lower grade stockpiles?
Well, the low grade stockpiles still probably the core of the feed. I would say somewhere in the order of 75% of the feed. Again, it'll be a bit more back end loaded in terms of timing. So in the initial quarters, probably closer to 90%. The key thing here is the low-grade stockpile kind of averages a little bit under 1 gram per ton. The high-grade material coming in from the underground, it varies, but it could be 3 to 6 grams per ton, depending on where we are. And every gram that we can improve the average grade through the mill is the equivalent to 1,000 ounces per month. So the aim is here to get from 1 gram to 2 to 3 through the mill on average, and we'll see the bump in production going forward. So right now, as you said, our guidance is 50 to 60. It's quite wide, and we've done that on purpose. As the underground is still relatively new and fresh, we want to get some consistency in there before we start promising too much.
So 25% from roughly over the year will be from the underground. So I guess by the second half of this year, you're at 1/3 from the underground. Why are you into ramping up more? Is that a function of the mine life, or?
Well, right now our underground, the resource in the underground is relatively modest. What we want to do is go after the resource that we know is there, put in place a few drilling platforms underground. It's a lot easier to drill there and expand the resource underground and quickly expand the resource. So right now we're attacking through 2 different access points from the pit at 2 different levels to access the ore, but they're relatively modest scale at this point in time. And really is the core focus for 2026, whether it be open pit or underground, is to expand the mine life at Minera Don Nicolas. Right now, we recognize we have a relatively modest mine life on paper of about 2.5 years. We expect to grow that at least to 5 or 6 years would be our target.
2.5 years, is that because you have two separate operations? You have the underground and you have the leach pad. So if you just talk about the underground, what is the mine life and when you say 2.5 years, are you assuming, how much are you assuming of the 1,000 ton per day throughput will actually be from the underground and not from the stockpiles?
Well, right now we're kind of matching the two, so that they kind of, on paper, they manage each other through that life of mine over 2.5 years. As I said, the core focus is to expand that mine life. I can't tell you how successful or unsuccessful we'll be over that point in time. We're doing a 50,000 meter drill program in 2026, and we're looking for more high grade ore on the extensions to the Paloma pit, which is where the high grade ore came from in the past, where we're mining underground right now. That program's underway. We have 4 drills going. As of, I guess, last week, we have all 4 on site, and they're now drilling away aggressively to expand that resource. We will also be looking for additional low-grade material that we can continue to expand the heap leach pad. Now, up until the second half of 25, we really didn't have the additional capital to expand on exploration the way we had wanted to, due to the various issues, gold price, what have you, of the years past. Now we're in a very different environment, and given the size of the property of 330,000 hectares, the numerous targets we have, we think we'll be successful. It'll just take some time before we can daylight those targets and results. One of the things we're also looking at, given the change in gold price dynamics, a lot of the historical open pits were designed at, call it 2,000 less than $2,000 per ounce gold. So we're going back in those and rerunning the whittles to see if there's additional ounces we can quickly bring out of the historical open pits that would now make it into the resource versus historic.
How much did you actually drill last year, and where was that before we speak about 5,000 meters for this year?
Yeah, we did. We were targeting 20,000. We got a little under 10,000 meters completed. We had a lot of. We only really had 1 drill going. We had a few mechanical issues, and unfortunately, in Argentina, if you need certain spare parts, they're not readily available as they are in some other districts, just because of the still have some customs and control issues. So that was a little bit disappointing. We were getting lots of indications. We're not going to be releasing, we're not an exploration company that focuses solely on the results of the drill bit. We're looking at growing a resource. So when we publish our results from the drilling, we'd expected to actually have some coherence as a resource and the potential mineability of it, as opposed to just saying, oh, we have this drill result and this drill result. We don't think that's going to add value to the story. We want to make sure it's going to be a resource that we can mine.
So the 5,000 meters, where are you focusing? Where are your 4 rigs now? And
right now we're in an area we call Paloma Sur, which is, as I said, just to the southern part of the Paloma open pit. And then at the bottom of the open pit, when we were mining it, it was probably 10 grams per ton. We're looking at the offset of that. We think it was pushed a little deeper. So we're now drilling along that extension. We're also drilling in an area called Paula Andrea. And historically, that is where we saw some very high-grade shoots, such as Baratina, which we mined out in 2025. And that was like 10 grams per ton, but it was relatively small at that time in terms of size and scale. But we're going back into that area and continuing to look for additional shoots that could be very robust in terms of grade, but maybe not huge in terms of volume.
What are your best target to either expand or find material for the leach pad? Because this is for the underground.
Yeah, the leach pad is really, there's more material in the area of Las Calandrias that we can look to continue to add there. There's also other areas across the property that in the past, maybe there was a couple of drill holes that intersected low-grade material, which wouldn't have justified being brought to the mill. So again, it's really just following up on a number of targets from the past that we haven't had a real chance to go and do what I would call a definitive exploration program on.
What would you consider to be a good success in terms of mine life additions, both for the underground or for the CIL and also for the leach pad?
I think for both, obviously for the leach pad, given it's the core part of our production right now, and that's all in place. I think if we could get that into that sort of 5 to 6 year category, would be make the investor and ourselves a lot more comfortable. It gives you a lot more runway to continue to explore. I think underground is a little bit more two-phase. We're obviously looking at extending the current underground operations where we are, but also looking at very much greenfield targets to look for new high-grade opportunities in very prospective areas. So again, I think the whole idea from our perspective is to grow the resource base across all types of production. We're really not that concern. Obviously, we want to fully utilize the infrastructure we have in place, but we want to continue to produce in excess of 50,000 ounces and get our production, our mine life up into that 5 to 6 year range. And then we'd be very much in line with some of our peer group in terms of producers of 40 to 50,000 ounces who have market caps 2 to 3 times ours and maybe have a slightly longer mine life, but not materially so. So we think that's the first key target for the operation itself. And I think that would be a real re-rating of the story.
So what are timeline for first results? What do you think?
We're not promising anything at this point. As I said, we're really focusing on making sure we have something that's coherent. We could release a drill hole here and there, but that's not going to be, in my opinion, what's really going to drive the story. People want to see the resource as opposed to single drill hole. Well, obviously, we could issue some flashy drill results here and there if we had them and thought it was meaningful, but I think having a resource is going to be more important. So I'd expect that to be, quarterly or every once a quarter. Maybe we'll provide a coherent update on how the program is evolving.
And how much capital are you spending at MDN this year, and also how much is not in the all-in sustaining cost calculation?
Right now, we're targeting about 35 million at MDN. 10 million of that is for pure exploration, and then of the other 25, we have to expand the leach pad to accommodate the current mine life, and we also have to provide an upgrade to the tailings dam, so that's also underway. Both of those are about 5 to 6 million each, and the other 10 million is pure sustaining capital. Trucks, managing the fleet, and making sure that we're well positioned for the long term. So most of that will be in the all-in sustaining capital. Obviously, there'll be a little bit of the tailings dam, which will be capitalized, but the bulk of that will be in the figure.
By the way, in terms of taxes, do you have any tax losses, carry forwards that you can use, or what is the tax rate the effective tax rate that you think you will pay for this year and next year?
As of 2025, with where the gold price is, as with many gold companies, we will now be taxable. And as you probably saw in Q3, there was a provision for taxes of about $12 million at the time. We'll have to pay that in middle of 2026, and then we'll pay in installments for the 2026 taxes. So taxes should be around 30%. But we don't have any material tax losses anymore.
Let's move to Lagoa Salgada. So let's start with the recent news. I mean, you got a tacit approval because the EPA, the environmental agency in Portugal, didn't respond, and then they gave an unfavorable opinion on the project. Could you explain what has happened?
Yeah, so going back into 2025, there were a couple of issues that the environmental agency wanted us to address, primarily focused on the use of cyanide and protection of aquifers. And because of that, we went through what's called Article 16, which allows us to adjust these key issues that they had flagged for review. Obviously, in our new flow sheet, cyanide wasn't being used, so that was immediately addressed. We did additional work to address the upper aquifers that were outlined. Now, in the current results, they have highlighted a deeper aquifer, which was not reviewed, nor requested to be reviewed through Article 16. So they had not responded by the expected date based on their own legal requirements. In that point of view, we believe we have tacit approval of the project. They then responded the next day saying that they have an unfavorable opinion, but there are many administrative issues here that do not make sense, and we will be addressing those through the various avenues we have. Where hopefully we can get to a negotiated agreement to make everyone happy. We have already submitted ways to address the newly raised concern, which is not, based on our understanding of Article 16, something that should have been raised, because you're not allowed to reverse your opinion. The first round of review, we had all 14 of 14 agencies give support for the project. We now have 13 out of 14 supporting the project. So it seems a bit disingenuous to provide an unfavorable opinion on something that can be readily addressed in terms of the mining industry. It's nothing dramatic. It was just not something we had been advised to address in this review.
So what are the possible outcomes here?
Obviously, we continue to be in discussions and negotiations with the various agencies to understand what their concerns are and can we modify and provide a solution that is acceptable. We obviously retain our legal opportunities to address this to the courts because we do not believe that they have followed their own legal rules in terms of providing a decision on time, providing us sufficient days to review the request as also required legally. So hopefully we don't have to go that route, but we retain our right to do so.
What could be the other route? I mean, that you just change some things in design and
Yeah,
and also in the feasibility design.
Well, usually, based on our understanding of the process in Portugal, and obviously this is a bit of a dilemma for Portugal and the EU with their focus on critical minerals and growing it domestically. For the newest mine in Portugal to be essentially blocked on a very much a technicality that can be readily addressed, it doesn't go against their political discussions. So typically this would be an issue that is addressed in what's called the recape phase, which is the detailed engineering phase, where you actually make sure that all the requirements from the environmental permit are met, or any updated issues are also met before you get the actual license to commence construction. So this is where we're a little bit uncertain about where this decision came from, because this is something that, in our opinion, could readily be addressed in the recapping phase.
When do you think you will know if you can actually resolve this either, or you have to go to court essentially? Or redo the permitting, the third alternative, I guess.
No, obviously we could do it all over again, something again we don't want to do, and restart the permitting process. I think in the next month or so we should get some guidance from various agencies where this is heading. But I really don't want to put a hard date on it at this point. We're dealing with government agencies, an election process that had just gone through in Portugal, so we'll have to give it a little bit of time.
So right now you don't really know which outcome is more likely?
Not with a high degree of certainty, and I don't want to mislead people on that.
Will you finish and release the feasibility study in Q1 now, or will you postpone that?
I think that'll be dependent on the discussion.
That's fair. By the way, maybe you could also summarize, so if you get the environmental permit, what remains in terms of permit? Is it just the recap phase, or? Yeah,
the recap phase, which, as I said, is the more detailed engineering. We've already done a lot of that, so and it really is just getting the higher degree of detail in terms of that, the engineering drawings. For a feasibility study, maybe it's 25 to 30%. At the recap phase, it'd be probably 75 to 80% of all the drawings being done and the actual design to a much greater level of detail, and addressing any of these later concerns that arise as that detail is improved. So that would be that would probably take us into Q3 to go through the recap phase, assuming we got everything sorted out in the near term. And then you get your construction license, and then you would move forward.
So could you just remind everyone of what type of project this is, cost and production profile?
Sure. Right now, it would be a VMS project. So we produce copper, lead, and zinc concentrates. We'd also produce gold and silver, some in the concentrates and some in a high-grade precious metals concentrate as well. We'd also produce a modest amount of tin through tailings reprocessing. Based on the prior feasibility study that was released in 2023, the Capex was around $160 million, and the NPV at that time at 8% was about $150 million US, at significantly lower metal prices than we're seeing today, especially for gold and silver. Gold and silver can represent up to 45% of the revenue stream here. So going from $1,800 gold to $3,500 gold is a long-term price. And the same with silver, going from 20 to, I don't know what's reasonable these days, it's a bit volatile, $40 an ounce. You will see a significant change in the revenue and hopefully in the net present value.
Excellent. So let's move to Mont Sorcier, your iron ore project in Quebec. You had news release in Q4, essentially where you outlined what to expect in the bankable feasibility study for Q2 this year. You'll have phase development. Could you summarize what to expect in the BFS?
In the feasibility study, as you said, we did update the market in Q4. As we went through the early parts of the feasibility study and the design phase, it was just, we're seeing significant capital inflation across the board for these sort of projects. And it just made more sense to go from a 5 million ton per year scenario to a phase 4+4 scenario in terms of optimizing the upfront capital needs and also optimizing the resource that we have. We have 1.2 billion tons currently. So we knew the resource could support a much higher run rate, but we also don't want to overwhelm the infrastructure that's in the area. We have access to a railway and a port that can easily manage 4 to 5 million tons per year. At 8 million tons, there may be some modest upgrades that those agencies will have to put in place. But realistically, what we've done in 2025 was On the back of that metallurgical study that confirmed that we could do 67% DR grade pellet feed material, again, that emphasized the higher grade production run rate was also going to be supported by the market and the market demand for that high grade pellet feed. That pellet feed still gets a significant premium over the 65% grade material that is traded on the market today, which gets obviously a significant premium over the more standard 62% grade material. And if you look back at the feasibility study, the preliminary economic assessment we did in 2022 at 65% grade material, we had an NPV about 1.6 billion. Obviously, our aim here is to keep that NPV somewhere in that order of magnitude, based on our expectations at this point in time. We'll see how that follows through. Based on, even though we're seeing that capital inflation, but with the higher production run rate, we think we'll still get there, and the higher quality product going forward. And I think that's going to really emphasize, this is a high quality project. Right now, we think the market's not giving us any real credit for it. If we get 0.1 times NPV, that's 150 million US, roughly 200 million in potential value accretion we see to the shares of Cerrado, based on a typical feasibility stage sort of project. Now, obviously, that's a long-term option to shareholders, whether we develop it, partner it, sell it, whatever down the road. I think the best way to daylight the value is to complete the feasibility, continuing to move through the environmental permitting process, which we will submit by the end of 2026, and continue with our discussions with the Aboriginal communities and the local communities to get social acceptance of the project, which to date has been very favorable to date.
Capex, initial Capex, where do you expect that to be? 750 to 800 million, or?
I think about somewhere in that 8 to 9 range. That's what my current thought is.
And what ways are there to fund that, just hypothetically?
Well, obviously, right now with these sort of gold prices, we'll continue to generate good cash flow from Minera Don Nicolas. Hopefully, we'll get Lagoa Salgada up as well, and that will continue to contribute from the equity requirement. We continue to have support from the export credit agencies and TD Bank for up to 70% of the upfront capital to develop the Mont Sorcier project, as we have with Lagoa. But obviously, that continues. So we think the equity contribution will be relatively manageable, especially if we continue to see the shares being re-rated. We would also expect to get offtake financing, given the high quality nature of this material, which, given the nature of the material, it's opening up the European market, the Middle Eastern market, and we think it'll be a very attractive product going forward.
Perfect. So would you say, are you actively looking for a partner, or are there any other way, I don't know, to directly crystallize shareholder value?
Not at this particular time. We continue to engage with people and just talk to people, but we're not actively looking for a partner at this point. Obviously, we have sufficient capital to develop this project to the next phase, and we'll see what the future brings. I think the best way to bring value to shareholders is to ensure that this is a very viable and robust project that is of interest to potential consumers or potential competitors.
Perfect. Then could you outline your key capital allocation priorities, and maybe also outline either if Lagoa Salgada is a go this year, or if it gets pushed into next year, further?
Well, right now, as we put out in our Q4 update, we're targeting about, in capital expenditure, growth capital as we like to call it, about 45 million in total expenditures. The bulk of that is at Minera Don Nicolas, as we talked about, in terms of exploration and capital on site. We're spending about $5 million US each or targeted $5 million US each at the time at Lagoa and Mont Sorcier to bring it to the next level. As I said, most of the work at Mont Sorcier has been done in terms of the expensive part, the drilling. Now it's the desktop engineering and the environmental work, which will continue for some time. At Lagoa, as you said, it's very much dependent on the current state of discussions.
How will you use your buyback program? You can buy up to 5% of the float.
Yeah, and we will continue to look at that on an opportunistic basis. We continue to view our shares as undervalued. Obviously, there's strict rules when we can buy and when we can't buy. We can't just sit there in the market and buy shares and run the share price up. It's not how it works. But we think that we will continue to be opportunistic and continue to support our shareholders.
If you would engage in M&A, what kind of transactions, assets could make sense?
Obviously, in this sort of price dynamics, expectations are high in terms of M&A value. So we want to see a project that we bring something to the table, whether it's our expertise, our ability to develop it from early stage. So we continue to review all scenarios, but we also recognize that maybe it's not the right time to be buying certain things. because the prices are exceptional and your ability to add value is restricted. So we're very opportunistic. We look at a lot of things, but we're not going to blow our brains out because people's expectations are, something that used to be 2 million is now 20 million because gold price is 5,000.
So where do you envision Cerrado Gold at the end of this year?
I think if we're successful in extending the mine life, I see the potential there for at least a double just on the gold side, just to get more in line with our peer groups in terms of their valuations, assuming gold prices stay at this level. I think we'll start to see some value being accrued for the Mont Sorcier project as we deliver a robust feasibility study. And obviously Lagoa will be dependent on how those discussions and negotiations work out over the next few months to see where that project stands in terms of the timing of the development. I think the project's still going to be developed. These issues are not uncommon in the mining business where there's some opposition, and then you have to work through that issue to bring it forward. Because so I think the potential here is significant re-rating in the shares if we're successful with exploration and as we continue to bring forward the Mont Sorcier project.